Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linen Associates with your weekend update, and this is going to be for Good Friday, Easter, April 14th, if you will now, 2017. So in the grain market, an interesting week because what we finally at the end of the week began a bounce in the meal and the soybean market. The wheat is still just hunky-dory, back and forth, not really doing a lot. Corn's trying to get a bit of a bid into it, and there's a lot of people that think that, that what's going to come alive are the corn-bean spreads, but you got to figure out ratios and all that if you're going to play that. Cotton got a little bit of a bounce, still weak in the sugar market. Cocoa markets had a rough week as well. And one of the things that we're looking at is the value of the U.S. dollar. President Trump yesterday said the dollar was overpriced, and boy, it tanked. But today, as we're getting into the end of the trading day, we're also getting pressure on the markets coming in the way of a sell-off in the stock market, strong bids in the metal markets going home. So that's all good news, I guess, in its own way. Now, as we look at a monthly chart of soybeans, you can see the triangle pattern, and you've had the breakout to the downside. So therefore, rallies typically get contained as they start approaching that. Now, I'm not saying the market's going up 45 cents here back to the $10 level at all, but rallies are probably going to be sold by the trade. That's what I would expect unless weather problems of some type come in. We just are looking at a lot more planting of soybeans. When you go to an area chart of closes only, you've gone from 1080 to 942, and we finally got a 13-cent bounce off that low, as you can see. Not a trend changer. When we just look at the thrust in the market, you've gone from a high of 1080 to a low of 929.60. So the difference here is the closes, the difference here is the price. Now, when we come to the swing line study, you've got a pattern of lower highs, lower lows. Admittedly, we had a key reversal outside week up. So this is an important week. The market got the thrust. It said, okay, that's enough temporarily until that low was taken out. Now, if it's taken out next week or the week after, that's very bearish action. If it's taken out after that, may not have the same impact that it does if it's taken out right away. The resistance starts coming in layers between 969.20, the 100-week moving average, and the 18-week, let's call it the 1007 level. The market was riding the lower Bollinger Band, and now it's finally lifted away. Should prices decide to break again, supports at the lower Bollinger Band number at 934.25. Momentum-wise, this market's in a bearish momentum. It's trying to go sideways now. If it does it under 20, it's what we call embedded. It's like when the market up here was over 80. Notice how as it was going sideways, prices were moving higher. As I step back here you had a market that had the downside momentum, and prices were breaking during that time down. So let's see if that does it. Nothing on this chart is friendly. That's what I can say, other than you got to bounce off of a key reversal outside week up, and so did meal. As you come to the meal market, you're getting the same bounce. So I'm going to look for layers of resistance first, 1317.90, the 100-week moving average, and then the 18 at 324.90. You would be hard-pressed to take out 331.30, but if you do, then you leave this downtrend and you go to more of a market that's just doing one of those. There's nothing on the chart, if you went through 331.30 right now, that would be bullish. All it would be is the end of a bear play in the market. Soybean oil remains locked into the bear trend. So resistance starts at 31.88 all the way up to 33.60. Now, believe me, if the market got going on this way, the daily chart wouldn't keep its bearishness quite the way that the weekly would, but the weekly's given this market a lot of leeway, and it's saying down, 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 and that's all that I can tell you. There's nothing friendly on this chart. In the corn chart, You've got the combination of the 100-week in green and the 18-week average of closes acting as barriers for this market, back and forth, day after day, momentum pretty flat in it, and price action actually pretty flat. So a market that I think that the strangle traders, they're writing options above and below the market, taking in the premium, and that's all I hear in the building. A lot of people doing that type of trading. Doesn't mean they're right, but I'm telling you what I'm hearing, and I'm seeing it in the wheat too. If you really think about it, it's just hanging at the 18-day average. So this is the way that the strangles collect that premium. We'll see if that continues on. In the cocoa market, as I said, the market's been breaking down, went to the lower Bollinger Band area, missed it by 9 points. The low of the week, 1874, that's 1865, and it got through the most recent lows. There's nothing friendly on the chart, but it's been a hard one to trade since the correction right here at the beginning of March set in, because once it cleared that high, the pattern hasn't been set. It's got a higher high and lower low, a difficult market for a lot of traders. The sugar just refuses to end this never-ending downtrend, and I realize people are saying, now it's getting a bounce. Okay, at the 100-day average, it's catching some traction. I understand that. But it's already spent a couple of weeks there. Now the question is, what next? Momentum, if you believe that momentum leaves price, it is still pointing downward, not upward. The coffee chart. The daily chart took a beating this week, and the market tried to get good, and it couldn't. And so it's finishing off from the looks of it about 115 lower for the week, lower highs, lower lows, in a downtrend, downside momentum. Should it be able to start pressing on the down from here, you might be able to get to that 132.60 level. Take out 142.80, and I think the downside is come to an end. In the cotton market, you're in a market that fell back to the 18-week moving average of closes, found support. You had a big down week last week. If you look at last week, by the way, the low was 73.38. This week's low is 73.35. So that big down didn't have any follow-through to it. The market seems to have honed in, and it's comfortable here against that 18-week moving average. It's in the 74.65 level. When we come to the cattle market, still bullish. And even at these prices, these high prices, cattlemen are making good profit. So they're not under the gun here. You may be taking cattle up even further. We know you're in key resistance. 125.60 is the 100-day average. The upper Bollinger Band is right here. So you're fighting a whole battle between that and, of course, the settlement, 125.37. So everything's fitting in with momentum pointing up. It is still bullish, admittedly in a resistance area. When we come to the hog market, it's the opposite. It's just a never-ending market that had a nice correction. That's over. The question is it going to resume all the bearishness it had back in this leg? And that's what people are asking. You've got the higher high, the lower low. Now you've brought the two moving averages. This is called a kiss. It's when the two come by each other, and if the red starts turning down again, it's a good sign that the market is probably through on this rally. What do you do with it here? Well, momentum is pointing down. Remember, on the weekly charts, I don't look at it overbought as oversold the way I do on the daily charts. I use it more as a where's momentum, and it's pointing down still at this particular point. So when you put that all together, you get your hands full and you try to figure out what to do. And over the holiday, I have something for you. You know, what I pride myself on is being a teacher. And what I like to do is start a certain way and teach. And I've done this. This is what I think I'm going in my 40th year of overall teaching. I began teaching a long time ago in the futures markets. And I created a new course at the end of last year, and I released it at Christmas time. It started off, I gave it basically away at $69.95. Why? I normally charge $200 for the course, but I redid it, don't have to send out a DVD, saved everybody money, but I think it's too inexpensive. I don't know what to tell you. So I've begun slowly raising the price, and it's not deterring sales. I'm also offering a small discount. So if you type in the words Ira 15, if you go to buy it, you're going to get a break of $15. The course right now is $89.95, and I have a secret. I'm going to raise the price when I come back after this holiday. So that's going to go up, and I'm taking off the discount. So if you really want to take advantage of something, you could begin this course. You can buy it now. Tell us when you want to start it. We'll work with you on it. The course contains 54 videos, each approximately 7 to 8 minutes long. You see what I do, then you do the same thing. We give you charting software that's worth $100. For that charting software, it's going to have all the data you need in to go back to the exact day that I tell you to go to in the video. You're going to do exactly as I do. Then in the mornings, I make a recording at 8:30 a.m. and think of it as a daily review of everything you've got. I'm going to talk Bollinger Bands, window envelopes, moving averages, slow stochastics. I'm going to teach you inside days, outside days, all the nuances that I know about in the marketplace. And as I add, you'll be getting more education. I can't make it any clearer. This is how you learn to plot window envelopes. My twice daily updates, and I say twice, I think I put out 4 or 5 yesterday to give you an idea. This is what the video will look like in the morning. I don't stand in it. I open up my charts and I walk you through everything, and I keep adding more ETFs. And yes, I believe this course works the same on a stock chart as it does a commodity chart. A chart is a chart is a chart. So, to take advantage, either call my staff, 866-973-2077. You can go to our website at www.iraepstein.com as well. Go under the word education, purchase the course. You'll see a video, and there's fact sheets there, FAQ sheets. It answers all the questions you might have. As people ask, I add to that. The other thing is you can always click right up here. The icon, if you're watching me on YouTube, it'll take you right to that page to make your life a little bit easier. Again, $89.95 with the discount, $15, $74.95, and here's the guarantee. It's going up in price with no discount at this point when I get back next week. You have yourself a great Easter holiday. I'll see everybody Monday.